As we look at the markets, check the Dow. We have just pared 200 points off the lows here. We're down 717. Low of the session market here, down 928. Let's get right to the floor show. We have the great Scott Bauer, Scott Shellady, our two traders. Scott Bauer, you just heard Dennis Lockhart say, we're getting awfully close. And he also talked about the Fed resuming credibility, or at least grabbing some of it back, because they're not so embarrassed that they stick to the wrong numbers here. But look at the 30-year fixed rate for a mortgage right now, and it has certainly skyrocketed. Forget, since December, where it was more like 3%. Right now, that's the yield. That's the 30-year Treasury yield. But if we could show the actual 30-year fixed rate, now you start to see the housing market slow down. What sectors are you watching most closely?
So, Liz, I think right now the way the market is trading, perception is reality, especially when you're referring to the Fed. So whatever they did yesterday, 50, 75, the perception was not going to be a good thing. So I don't think they're in a very good light right now. And that's how the market is trading. But in terms of how do you position yourself moving forward here, the banks during rising interest rate periods typically do well. But if we get to an economic slowdown, that obviously can hamper those banks. But there is one that stands out to me, and that is Citicorp. They have a 5.5 forward PE. I think it's really cheap. I love that bank among the rest of the banks that are out there. In addition, in this environment, you always have to look at cash-rich companies. So there's some in the tech sector that have been beaten up, and they're not fancy names. They're Apple, they're Microsoft, even a Cisco, if you will, that are cash rich, that I believe can withstand in a really, positive way here what's going on, and you want to own them down the road.
Oh, Apple's 4% cheaper today than it was yesterday, and we've got Microsoft more than 2% cheaper than it was yesterday. Folks, you could argue things are on sale, but Scott, is that Shellady? Is that how you see it, or is this a falling knife and you don't want to try and even catch it?
Well, 100% the second one, right? It's falling knife. Stay, what king? What's king right now to me is mattress king, right? Put your money in the mattress for the short term here, because I think that this is still a very dodgy scenario they're in. I was listening to Lockhart. Here's the deal, right? Shame on all of us to think that the people that got us into this mess are going to be the ones that can get us out of this mess. Okay, shame on us. Number one. Number two is that he wants to explain away the GDP now, the Fed tracker, 0% growth. If that tips into a negative, I've been doing this 35 years, Liz. That's the first time in my life that we've raised rates 75 bips into a recession and are thinking about doing it again. The sands beneath their feet are changing so fast, they've missed it. I think the economy is much weaker than they believe. Look, he said the consumer is still spending. Did he see the retail sales number last? It cratered. Look at Michigan Consumer Sentiment Survey. It's horrible, all-time record low. What are these people thinking? So I was surprised, obviously, you can tell by my voice. I understood the 75 BIP raise because I felt for once the Fed might try to act aggressive and hawkish, not just talk hawkish, but act hawkish. And the market gave them the door open for a 75 bips raise without really punishing them, because a lot of expectations had moved up to that. But I'm telling you right now, when this economy, these economic indicators start coming through weaker and weaker and weaker, because we've still got high gas prices, we've still got high food prices, there's been no relief anywhere, and we have historic synthetic tightening. What I mean by that is this: although we have the Fed raising rates now, but every other part of the American society is more expensive. So where's the relief for the American consumer?
Yeah, you've got Scott Bauer here nodding his head. Really quick on high energy prices. We do have crude and Brent higher in the aftermarket. Scott, what's your comment about that? Because that seems to be the driver of all things inflation.
It absolutely is, Liz. And the Fed is behind the curve because they're looking at data which is old. It's not leading data. And we know what's happening to Main Street USA. Main Street USA has started cutting back already, even though consumer spending is still up there. So to me, we are in a recession right now. And I'm going to go out and say by the end of this year, Liz, if the path continues this way, we may get the Fed to actually cut rates.
Oh, in 1 year, in the same year. Interesting. We've got to run, gentlemen. Scott and Scott are great Scots.